again, guys, to our YouTube channel. Today's lesson, it's all about income statement. So we are going to take a look at different transactions for income statement for the year ended February 2021 as follows. So guys, we have income statement for Feb 2021, whereby we are going to take a look at our sales, cost of sales, as well as our gross profit. So before we can start going through our transactions, we need to go to our trial balance. We need a trial balance in order to complete our sales as well as our cost of sales. Let's go to our trial balance and look at the opening amount of our sales. Our opening amount for our sales is as follows. So we are going to go to our trial balance at the nominal section, at the nominal account section, whereby our sales is recorded under the credit side as how much? As 3 million, and then our cost of sales is recorded as 1,810,000. And then guys, the rule that I always tell my learners is that before you do sales, you need to take your sales, subtract the debtors allowance. Let's go to our trial balance. Do we have debtors allowance? Yes, we have. Then how much is our debtors allowance? Then we subtract how much? 500,000 in our debtors allowance, and then we are safe. We can go for our transactions. And then let's take a look at our following transactions. At our transaction, let's take a look at the adjustment and informations. At the transaction D, information D, it says a debtor B White complained about the defective titles that were fitted in his house. Josie Tiles issued a credit note for the following, but this has not been recorded in the books. Meaning, guys, we have a debtor who complains about our tiles, whereby those tiles are not fitting in his house. So the debtor issued a credit note, meaning we need to allow this certain debtor to return that goods and services we sold to him. And then we have that information. We have tiles returned. Normally, whenever we allow a debtor, we will allow a debtor to return our tiles at at cost price. That's why they gave us tiles returned, and then in bracket we have cost price for how much? 13,000. Then we are going to subtract 13,000, and then at sale price at 21,500. Then we are also going to subtract 21,500. So normally whenever you do sales, you are going to subtract, if ever there is any goods and services that are returned in the business, you need to return those those goods and services. And then also you need to show under your cost of sales that you have returned those goods and services using the cost price. While you returned those, you allowed the particular customer to return those goods and services with the selling price. And then we can add everything there, and then we can have our amount. Our final amount as 240 at 2,447,808,500 as 2,478,500. And then we are going to subtract 13,000 from our cost of sales. And then our final amount there, it will be 1,797,000 in brackets. Because of its cost of sales, we need to show in brackets that this amount will be subtracted from our sales, so that at the end of the day we have our gross profit. We made a profit of how much? Of 681,500. Thank you guys, enjoy your day.